Hey guys, it's Vic from Grasping the Market and welcome to our market briefing. Well, first day of the week after a massive move on Friday, we are trading inside. It was an inside session, not a lot happening on the longer time frame. You can see that with a few days remaining of the month of August, we remain around the middle of the earlier year balancing range. We opened the week inside the previous week's range, so no change on the larger time frame. But now, being so close to month's end and with the recent fundamental developments, there's a very good chance that August will be confirmed as a fail from this breakout at the 2969 area. On the daily, well, not much to add. We remain on an intermediate term balance range, and today was a form of short-term balance, being an inside day. The important thing to highlight on the daily chart is that we opened well inside Friday's range and we left that potential daily excess there, and it remained in place for the whole session, a good chunk of it. So we'll get a little bit more detail on the market profile. I think the key message here is that all that uneven distribution that we had in after the big move on Friday, we traded through today and on the overnight. So basically, we accepted this lower distribution, we accepted the move, and we kind of found acceptance there. Now, opening up the profile, the other thing that comes to my eye is, number one, late Friday, we had a spike lower towards the end that was quickly rejected and left this very healthy tail. And today, after an initial morning sell-off, settlement acted as support, which was the base of that spike, and we didn't go there. So it seems that this excess is real and is supporting the market. That's number one. Number two, well, actually. So we validated the fair value from Friday, and we had evidence that this tail is for real. Now, there was a constant push to go up through the session, because when the F high cleared the early morning high and this started trending down, you could see a lot of give back in all the periods. And yes, at the end of the day, boom, we took the morning high. But the funny thing, or the interesting thing, is that we stopped right at where the singles start. So yes, there was a push to the upside. We validated the lower distribution from Friday. We validated the move, but we didn't get through the singles. So in the short term, I think the downside is still pretty much alive, and that will be the case until we get back above this 28.98 area or so, and we close this double distribution. That will be very meaningful. Until that happens, I'll keep an eye open for the short side. And the last comment I want to make on the profile is that there's some excess at the bottom. It's not great, but there is excess, a few ticks. But look at the JK LM lows. It is a little bit of evidence of short-term money. Actually, this is a triple low. You had the E, J, and K lows at the same price or within one tick of each other, and then you have a similar behavior at the LM. So that gives a weak, questionable structure. So if we start failing to the upside, we remain with the singles and we start heading down, pay attention to this area because you could trade through really quick. So the focus for tomorrow is on value development, and I would say relative to this afternoon range between 28.66, which is the M low, 66.75, and the day high. If we start getting acceptance below the M low, that will denote change, and I think that will increase the odds that we're going to test that daily excess left on Friday. On the other hand, if we get acceptance above the N high, Well, we definitely have changed from Friday, as we will be closing some of these um, singles left, and we need to pay attention to what happens if we get back inside that upper range that we have in there. As we have mentioned in the previous recent briefings, the Fed activity, and we have a Fed meeting in September, and the developments on the trade front with China are driving the market. So if you're taking positions, I mean, you need to be aware of what's going on that front and always have stops in place, because this market can react to news and it can move really fast. And as we always say, anything can happen because odds are just odds. So let's just keep monitoring, keep an eye open for the big picture, which is this one, and let's see how the week develops.